Another Zero Hedge article here, although it's actually authored by John Mauldin via MauldinEconomics.com. John Mauldin says, one of these three black swans will trigger a global recession. Really? I'm thinking to myself, I thought we're already there. Aren't we already there? 46 million people, food stamps, EBT cards. Nobody wants to really do hard day's work. I was telling you, we went to riffraff at Kmart the other day. Freaking riffraff worker doesn't know what he's doing. And I didn't tell you this part of the story. We got the outdoor, set, whatever. Came with a table and 6 chairs, whatever. And it's in a big box, so they wheel it out the garden center. Not a single employee in the garden center, and the big giant garage door thing is closed. So while they're doing that with my wife and kids over there, this new employee, I drive the van around where they say go ahead and pull up to the front. So I do that. I would have thought the garage door thing would have been open by now. I mean, I had to go out to the parking lot, get in the car, come over here. You guys were already en route over there, and I was with you, and I walked back the other way. So I'm looking through the window, I can see my kids, my wife was, and they're like, we don't know. So one of my daughters comes out, Emily, asked mommy to ask somebody to come help. Like, the guy dropped the stuff off there, right? So he saw the door was closed. Yeah, well, I'm assuming he's probably going to get a manager or someone to open it. You know what? Because I've been dealing with riff-off all day today over here at Kmart, my wife included. Emily, ask mommy to go find another employee just to be safe. Okay. A few minutes later. Yeah, we found a new employee. He said he's gonna help push it to the front of the store. Because this is locked. The manager locked it, and it will not be open the rest of the day. Everybody was supposed to know that. So the guy pushed the stuff over here and then just walked away, basically. Yeah. Okay. And I've seen other people while we're in line dealing with the people that work at Kmart and whatnot. And I'm asking myself, why the hell are we ever shopping here? Why did we ever have to come here? Well, I had these little coupons. My wife, coupons. She says, since we didn't get the coupons anyways, they couldn't even figure out how to put it in. This is the worst experience I've ever had at Kmart in my entire life. I don't think I'm ever coming back, she says. Good. Because there's nothing really here that we had to have here. Although we did get a nice discount on that little outdoor set, which we set up today. Matter of fact, I should have took a little picture of it and said, hey, check, show my people, hey, check this out. This is kind of nice. If it fits good in the back patio area, whatever you want to call it. Anyways. Again, it's as good as it's going to get, folks. It's as good as it's going to get, at least for now. It may actually come and get worse. Because as the middle class dies off, so to speak, and we all head towards being poorer and poorer, it will actually get worse. So it's not going to get better. So right now is as good as it's going to get. My experience at Kmart is as good as it's going to get. Exactly 10 years ago, we were months away from a world-shaking financial crisis. By late 2006, we had an inverted yield curve steep to be a high probability indicator of recession. I estimated at that time that the losses would be $400 billion at a minimum. Yet most of my readers and fellow analysts told me I was way too bearish. Turned out the losses topped well over $2 trillion and triggered the financial crisis known as the Great Recession. Conditions in the financial markets needed only a spark from the subprime crisis to start a firestorm all over the world. Plenty of things were waiting to go wrong, and it seemed like they all did at the same time. We don't have an inverted yield curve now, but when the central bank artificially holds down short-term rates, it is difficult, if not impossible, for the yield curve to invert. We have effectively suppressed the biggest warning signal. Right, so imagine you're at a school and it's fire started, and somebody somehow stealthily has disabled all the fire alarms. You should be hearing, fire alarm, and you hear this. Crickets. That's what you hear. Except you didn't even hear that. You just hear pure silence. So, we've effectively suppressed the biggest warning signal. But there is another recession in our future. There is always another recession, he says, which I think will ensue by the end of 2018. And it's going to be at least as bad as the last one was in terms of the global pain it causes. Below are 3 scenarios that may turn out to be fateful black swans. But remember this, a harmless white swan can look black in the right lighting conditions. Sometimes that's all it takes to start a panic. Number 1, black swan number 1. Janet Yellen overshoots. It is clear that the U.S. economy is not taking off like the rocket some predicted after the election. President Trump and the Republicans haven't been able to pass any of the fiscal stimulus measures we hoped to see. Banks and energy companies are getting some regulatory relief, and that helps, but it's a far cry from the sweeping healthcare reform, tax cuts, and infrastructure spending we were promised. Consumer spending is still too weak, so people may be less confident than the sentiment surveys suggest. Inflation has perked up in certain segments like healthcare and housing, but otherwise it's still low to non-existent. In this, by any stretch of the imagination, the kind of economy, is this, by any stretch of the imagination, the kind of economy in which the Federal Reserve should be tightening monetary policy? No. Yet the Fed is doing so. I've discussed this numerous times. You don't go and start raising rates and tightening policy when the real data, is suggesting you do not do that, which means the Federal Reserve is going to help along the next recession. And it might be a doozy. You know what I mean? It's in part because they waited too long to end quantitative easing and to begin reducing their balance sheet. FOMC members know they are behind the curve and they want to pay lip service to doing something before their terms end. Plus, Janet Yellen, Stanley Fischer, and the other FOMC members are religiously devoted to the Phillips curve. The black swan risk here is that the Fed will tighten too much and too soon. We know from recent FOMC minutes that some members have turned hawkish, in part because they wanted to offset expected fiscal stimulus from the incoming administration. That stimulus has not been coming, but the FOMC is still acting as if it will be. What happens when the Fed raises interest rates, in the early, uncertain stages of a recession, instead of lowering them? Logic suggests the Fed will curb any inflation pressure that exists and push the economy into outright deflation. Deflation is an economy as debt burdened as ours. Deflation in an economy as debt burdened as ours is could be catastrophic. Let me make an uncomfortable prediction, he says. I think the Trump Fed, and since Trump will appoint at least 6 members of the FOMC in the coming year, it will be his Fed, will take us back down the path of massive quantitative easing and perhaps even to negative interest rates if we enter a recession. The urge to do something, or at least be seen as trying to do something, is just going to be too strong. Black swan number 2. European Central Bank runs out of bullets. Relative to the size of the Eurozone economy, Draghi's stimulus has been far more aggressive than the Fed's QE. It has pushed both deeper with negative interest rates and wider by including corporate bonds. Such interventions rarely end well, but this one is faring better than most. Europe's economy is recovering, at least on the surface, as the various populist movements and bank crises fade from view. But are these threats gone or just glossed over? The Brexit negotiations could also throw a wrench in the works. Anatoly Keletsky at Gavekal thinks Draghi is still far from reversing course. He expects that the first tightening steps won't happen until 2018 and anticipates continued bond buying at a slower pace and near zero rates for a long time after. But he also sees risk and makes an important point. The U.S. Tapering and now tightening coincided with the ECB's and Bank of Japan's both opening their spigots, so to speak. That meant worldwide liquidity was still ample. I don't see the Fed returning that favor. Draghi and later Caruso will have to normalize without a Fed backstop, and that may not work so well. And finally, Black Swan number 3. The Chinese debt meltdown. China is by all appearances unstoppable. All appearances unstoppable. GDP growth has slowed down to 6.9%, which is great. That'd be a great number if we could see that here in America. According to official numbers. The numbers are likely inflated, of course. But the boom is still underway. Ambrose Evans Pritchard reported some shocking numbers in his July 17 Telegraph column. A report from the People's Bank of China showed off-balance sheet lending far higher than previously thought, and accelerating quickly. Interestingly, the Chinese have made all of this quite public, and President Xi has taken control of publicizing it. The huge increase last year probably reflects efforts to jumpstart growth following the 2015 downturn. Banks poured fuel on the fire because letting it go out would have been even worse. But they can't stoke that blaze indefinitely. President Xi Jinping has been trying to dial back credit growth in the state-owned banks for some time, but in the shadow banks that Xi doesn't control, credit is growing at an astoundingly high rate, far offsetting any minor cutbacks that Xi has made. A market in which they all think the government will save everything is generally not one you want to own. But China has been an exception. It won't remain one forever. The collapse, when it comes, could be earth-shaking. It is very possible that any of these black swans could trigger a recession in the U.S., and let's be clear, the next U.S. recession will be part of a major global recession, and it will result in massive new government debt buildup. It will not end well. Now, I don't know if I've ever read anything from that particular guy, John Mauldin, via MauldinEconomics.com. But he makes three great points as far as 3 different black swan events that could happen. And he's naming 3 as if maybe one of them could happen. As I'm reading them, I'm thinking to myself, all of those sound plausible. Very, as a matter of fact. They all seem to be like they could all happen. Goodness. So, anyways, on to the next one.